India built the most advanced payment system in the world and then gave away the customers to America. PhonePe is India's most downloaded payment app and it is owned by Walmart. Google Pay is built entirely on Indian government infrastructure. Google paid nothing to construct the underlying system. Together, these two American companies process over 80% of all UPI transactions or digital transactions in India. Some people might say, Indians are poor. Why would Google and Walmart be interested in people who are only earning $2,500 a year? The answer has two parts. One is about money, the other has to do with Indian culture. We will get to that in a bit. But first, we need to understand what India actually built. A chai stall, a street vendor, an auto rickshaw driver. All of them take UPI. And the thing that still amazes me is that there is no need to ask the vendor if it went through. No awkwardly flashing your phone screen to prove the transaction. Because a small speaker makes a sound with the transacted amount, you can literally walk away from the transaction with 0 words exchanged. I've used contactless in London, Pay Now in Singapore, Apple Pay across Southeast Asia. None of them feel like this. In Singapore, nearly all vendors have it, but some are not always happy to accept it. Same thing in the UK. In India, a chai stall that looks like it has not changed since the 1960s takes UPI without a second thought. And the scale is unimaginable. India processes more digital transactions than the US, UK and Europe combined. Now some people might say, India has 1.5 billion people. Of course the transactions are going to be high. So let's look at the numbers. UPI has around 500 million active users. The combined population of the Western world is roughly twice that. Their income per person is also 10 to 30 times higher than India's. In a normal world, they should be dominating all kinds of payments, including digital. Yet, 500 million Indians account for 49% of all real-time payment transactions globally. If that is not an adoption story, I don't know what is. The US launched its own real-time payment system called FedNow in 2023, nearly 15 years after India. Now, some will say that America never needed digital payments in the first place. They already had Visa, MasterCard, a mature card system that already worked. But America's card system was built for people who were already banked. It never tried to solve the financial exclusion problem. There are about 50 million unbanked or underbanked Americans, but hundreds of millions of Indians who don't even have access to proper sanitation have access to a world-class payment system. But wait a minute, what's in it for the American companies? Look, in the United States, acquiring a single financial services customer costs on average $1,450. That's the CAC basically, customer acquisition cost. Every bank, every fintech, every payment app is fighting over the same pool of people who already have 3 credit cards and a brokerage account. Growth in the West has a ceiling. India has no such ceiling, at least for the foreseeable future, and the customer acquisition is already done at a heavily subsidized cost. But lower customer acquisition cost usually means lower quality customers. So what exactly are the American companies betting on? The thing is, India doesn't even have to be a superpower of any kind. The volume of people is so large, especially young people, that even a small improvement in income creates a massive business opportunity. This could be the largest wealth creation event of the next 30 years in the making. And American companies already missed the ship once with China. They won't repeat the same mistake with India. But here's the strange part. They're not making any real money from the UPI transactions. UPI basically is a zero-fee system. So if Google and PhonePe are not here for the transaction fee, why are they here? Before going there, we need to make a distinction between two things. Building something and capturing the value from it are two completely different things. Think of it this way. A government builds a road, but the businesses that open along that road, they are the ones making money from it. UPI is that road. And the question nobody asked was, who's going to open the shops? The architecture of UPI was deliberately open. Any company could plug in and build on top of it. So who grabbed the opportunity? Neither Google nor Walmart did anything illegal. Indian consumers chose these products. Google built GPay on top of Indian government infrastructure. The identity verification, the bank integrations, the regulatory framework, all of the dirty work basically was already built and funded by the Indian public banking system. Google just had to build the app layer on top and acquired hundreds of millions of users at a comically low cost. Walmart came in through a different door. At least they spent some money. In 2018, they acquired Flipkart, India's largest e-commerce company, for $16 billion. And Flipkart owned PhonePe. So Walmart got the largest e-commerce player plus the payment system. Again, nothing illegal about it. But was this altruistic? Were they doing India a favor? In 2023, when Walmart invested another $200 million into PhonePe, the CEO of Walmart International said this: "We are excited about PhonePe's future and have confidence in how it continues to expand its offerings and provide access to financial services for Indians at scale." Financial services, not payments. That one phrase tells you everything about why they are really here. The payment system was never the price. Credit, lending, insurance, these are the financial products where big margins exist. And here's something to think about. Most Indians don't even have basic insurance right now. So imagine the growth potential when that changes. And every digital transaction feeds the data set: what people buy, where, how often, how much. And there is one more thing not many people are talking about. Right now, there is no evidence that Google or Walmart are using UPI transaction data to train AI models. But think about what that data represents. Complete financial behavior across 500 million people. As AI gets better at building products from behavioral data, that data set becomes exponentially more valuable. So, India built the infrastructure subsidized by the public banking system, brought 500 million people onto the platform, and then handed the customer relationship, the financial services opportunity, and potentially the most valuable behavioral data set in the world to American companies. How did this happen? There are a few possible explanations. Policymakers may have prioritized getting a billion people into the digital economy first and worrying about the commercial layer later. Or they may have genuinely believed open competition would produce better results. Or they may have simply had no idea what they were signing up for. Or some decisions may have served interests other than the country's. It doesn't matter which one it was, because the outcome is the same regardless. The costs were incurred in India, and the value creation is poised to happen in America. But remember, I said the answer had two parts? The money part you now understand. This is the second part. If American companies could see the opportunity so clearly and the architecture was open, why were no Indian companies willing to take the bet? That's because India is a deeply risk-averse society. The purpose of education for most Indian families is a stable job. The purpose of a stable job is marriage. That is the arc most Indians are raised toward, taking the safer option. You see this at every level of society. Families that could fund world-changing innovation prefer throwing the world's most expensive weddings instead. And remember what shaped Indian IT for the last 30 years? Execute what someone else designed. Deliver what someone else specified. Play it safe. UPI is the same instinct at a national scale. Build the infrastructure, make it work, create an adoption case study. The question of who captures the commercial layer on top feels like a risk. And someone else was happy to take that risk. It just happened to be Americans. But if you really think about it, when you open the floodgates to everyone, it was unrealistic to expect Indian companies to compete. Google and Walmart can risk more on a single project than most Indian companies earn in a lifetime. What do you think? Was this inevitable? A policy failure? Personal interests of decision makers? Or just nature taking its course? Comment below. UPI is not the only place where India built something real and gave away the value. The same question is playing out right now inside India's IT industry. Because Claude exposed the problem with Indian IT. I've made a video about it. You can check it out next.